we're seeing quite strong and sustained growth for rare earth supply in the years to 2030.
Hello, and welcome to another one-to-one mining investment APAC content session. Today, we have David Merriman, Manager of Battery and Electric Vehicle Materials at Roskill, to give us the outlook on rare earths.
Okay, well, thank you for the introduction, and it's great to be able to share Roskill's views on the rare earths market with you and talk a little bit about our expected market developments, particularly in a time where we're seeing some quite notable volatility in geopolitical relations and also advances in technology towards rare earths and their use in major markets. The presentation does include some forward-looking statements, so just a quick disclaimer. So some of you may have seen this slide before. The idea is to really just pinpoint some of the major rare earth development projects which are ongoing globally, and it really highlights that these projects which are under development are not necessarily geographically confined. So if you compare it to, say, how the cobalt industry looks, where there's a real heavy concentration of those operations within DRC, it's not doesn't necessarily have the same geographical constraints when looking at projects under development. But if you are to look at the actual production, both the mined and the refined stage, it shows a very different story. The shading on this map here really shows that clear dominance within the Chinese market. And that's something that these charts here really show quite clearly. So these two charts, particularly showing the mine supply of rare earths, or the forecast mine supply for 2021, of rare earths on the left here, and the refined supply on the right. And if we look at the mine supply, we can see that whilst China is still the dominant producer of mined rare earth products, with around 54% of global production in 2021, there is notable input from other major producers, particularly in the US with Mountain Pass and MP Materials there. From Australia, where we're seeing Linus rare earths, and also supplemented with production from some other companies there, really forming a notable portion of that, and also a very important source of heavy rare earth ores and concentrates coming from Myanmar. Now, if we take a look at the refined side of things, it shows a little bit of a different picture. There's a much stronger concentration of that production within the Chinese market, with a lot of that mine supply which is taking place outside of China flowing into the Chinese market. So in 2021, we're expecting to see China import around 70,000 tons of rare earth oxide contained within ores and concentrates and imported products, which represents around 30% of that global mine production. So there's a strong amount of imports into the Chinese market, which supplement that Chinese domestic production. And there's a number of reasons why this has been able to form. One of these is that China has really seen the availability of these lower cost and good quality feedstock materials from these rest of world producers and their availability, and has formed a market to accept these. But probably most importantly is the environmental burden which is incurred during the mining of rare earth products. Now, the rare earth industry has a bit of a bad reputation for environmental damage which has been caused, and a lot of that is due to historical mining methods which we use maybe in southern China on iron absorption clay projects, or also in the north of China, particularly at Bayan Obo, with some of the tailings disposal there. Now, China has really cracked down and introduced much more stringent environmental regulations surrounding the rare earth extraction industry in particular, and this has led to a lot of the operations within the Chinese industry suspending production or completely abandoning production, and has seen those processing facilities look outside of China for feedstock sources to avoid having to upgrade or kind of meet those new environmental the new environmental legislation within the Chinese domestic market. There's also a degree of resource protection, which China has been quite vocal about over the past decade or so, feeling that the production that it is providing to the global market far exceeds its actual proportional resources and reserves that it holds. So there is a degree of kind of evening that out as well, and making sure that it's not just running down its domestic reserves and resources. It's also accepting material from outside of China. Now, the raw material availability is just one of the factors which has really supported the development and allowed China to maintain control over the refining side of the rare earths industry. Another key point is technological knowledge, which is inherent within the Chinese market. There's been significant research and development over the past 20, 30 years into the mining, refining, separation, downstream use of rare earths within the Chinese market. And this has really allowed them to develop very efficient technologies to undertake these stages. And there is a ban on the export of IP relating to rare earth processing and use out of China, which is maintaining a lot of that control within the Chinese market, and also making it quite difficult for some of these rare earth projects under development outside of China to really maintain, to kind of compete with some of these advanced Chinese processing facilities. There's also a great deal of government involvement within China, which has supported some of these major Chinese operations through periods of lower pricing, something that rest of world operations have not necessarily been supported in the same degree to. And a lot of the government consolidation of the industry over the past 5-6 years in particular has seen a great deal of integration within the rare earths market, which also breeds a lot of advantages when it comes to the survival and the support for that rare earth processing capacity. And if we have a closer look at that integration, we can see this chart here really shows some of the major Chinese SOEs and the integration that they have within the rare earths market. So the largest producer globally of rare earths, China Northern Rare Earths Group, you can see is integrated completely from the mine production through separation into downstream rare earth products such as NdFeB magnets here, and onwards into the production of finished equipment such as MRI scanners and medical equipment. So there's a lot of value add here. There's a lot of supply security which is available because of this integration, but also because it's all integrated within one major company. There's also lower margins which are paid as material flows through the supply chain. Similarly, if we look at Guangdong Rare Earths Group or Xiamen Tungsten, they are now looking to build NdFeB magnet production capacity and extend their footprint within the rare earth supply chain, particularly when it comes to rare earth magnets. Comparatively, if we look at the rest of world operations, we can see that the supply chain is much more fragmented between different companies. And we can see Lynas Rare Earths, near performance material here, spanning a good portion of the supply chain, but missing key stages, either to improve supply security or to improve value add. Now, rest of world companies have increasingly looked to form cooperative agreements between different companies and having multi-company supply chains to improve the security of supply. But this also brings issues along with it, particularly when it comes to the coordination of that production and kind of limitations on scalability. If, say, one company wants to expand production significantly, it needs to also be matched by those other companies to kind of form that or maintain that supply agreement. So there can be limitations on scalability. And also the sales margins between these different companies also need to be maintained as well. So it doesn't provide as greater advantages in terms of the price of raw materials moving through the supply chain. Now, there is a great deal of focus on the formation of regional supply chains, and a lot of that is coming with that integration as well. And just to touch on a few of the key markets and industries that are really targeting this, and I think the USA is really the one which has been having a lot of the headlines recently, particularly since 2017, with direct involvement in certain rare earth processing projects in particular, looking at various different routes or kind of supply sources for rare earths, either as byproducts of other materials. And it's really seen a great deal of kind of advancements and investments within sourcing these raw materials. But the main focus of the US has been the upstream side of the industry, or kind of from rare earth production through to kind of rare earth separation. And that's really where the majority of that investment has been. There needs to be that further development in downstream markets to support those upstream stages of the industry. And there's still a lot of development which needs to go on, and a lot of investment in expanding that production capability to support those upstream markets regionally. Similarly, if you're looking at the Australian market, it also has that upstream focus as well. There are several rare earth projects under development within within Australia, either from primary rare earth operations or from heavy mineral sand operations. There is a great deal of government support for these. So, for example, there's government support for the Lynas operation, or the Lynas cracking and leaching facility in Kalgoorlie, or for Iluka's processing facility. There is letters of support by the government, but no direct kind of financial involvement as of yet. But these are really only looking at the rare earth market through to that refining step. So we'll need to export those materials to really continue to progress them through the supply chain. On the other side, really, where we've got markets which have much more of a downstream focus and less abundant upstream resources, particularly the EU and Japan. The EU is very much focused on looking at recycling, processing of in a sustainable and kind of environmentally friendly way, I suppose. And that is kind of the main focus where the EU is looking at the moment. There are rare earth resources within Europe which are under development, but not quite as abundant as what we might see in North America or in Australia. Now, the European market, with its strong demand requirements, particularly from the automotive industry, will likely maintain its reliance on imports of feedstock and become more of a processing and refining base. And that's where the majority of that research and development is going, particularly for the EU. It's a similar story for Japan. They have a much more mature rare earths industry there in terms of an established NdFeB magnet production, other rare earth end-use applications, polishing powders, etc. And the Japanese government has been quite involved in securing its supplies of rare earth products historically through its involvement, say, with the development and financing of the Lynas operation, and now via JOGMEC, its involvement in heavy rare earth operations, particularly those in Namibia. Other major regions which have looked to invest within the rare earth space, particularly Russia, where it has existing rare earth production at Solikamsk. There has been the reports of significant investment within the Russian market, but that development is still kind of continuing at a slower pace than maybe what would be expected. In India as well, there's a huge push to develop downstream and expand the rare earth capabilities within the market, but this is also being held back by some bureaucracy and legislative barriers, particularly when looking at production of rare earths from, say, heavy mineral sand operations, which needs to be government controlled. And development here has been relatively slow at best. If we have a look at the competition really with China, China really continues to strengthen its position globally within the rare earths industry, integrating further downstream and having a lot of that government control on these operations, diversifying its feedstocks, particularly looking at those which are able to provide a lot of material for the magnet production or magnet rare earth products. So those with a high NdPr content or those with a high DyTb content. So monazite mineral concentrates in particular, or those heavy rare earth materials from Myanmar. And it continues also to invest heavily in the development of processing and refining technologies, making it increasingly difficult for some of these other rare earth operations globally to keep pace with the Chinese development. If we're taking a look at our supply outlook overall and over the next decade, we're seeing quite strong and sustained growth for rare earth supply in the years to 2030, with a compound aggregate growth rate of around 4.5%, with rare earth production just approaching 260,000 tonnes of Oreo by 2030. Now, we still expect to see China forming the vast majority of this production, however, with around 2/3 of that refined production by 2030. And there will continue to be a focus on the production of the magnet rare earth products, particularly NdPr, and the heavy rare earth aspects of that as well in DyTb. And this chart on the right here really shows how we're expecting that indexed growth to occur. So the higher growth for NdPr in particular, and we can see heavy rare earth oxides really accelerating beyond 2025. Now, that's not only because of primary rare earth production, but also a greater influence of secondary recycling of rare earth magnet materials in particular, which are able to target that NdPr content and the Dy content as well. And a lot of that supply growth is required to meet some quite significant demand growth, again, particularly from magnet applications, which are expected to form 40% of all rare earth demand by 2030. Now, we are expecting to see demand growth in other rare earth applications as well, particularly those listed here, but it's the magnet industry which is expected to really dominate and take control of a lot of the influences on the rare earth demand aspects. So where is this rare earth magnet demand coming from? And it's principally coming from the accelerated uptake of electric vehicles and the use of permanent magnet motors within them. So the permanent magnets which are used in the drivetrains of electric vehicles, you're particularly seeing around 2 kilograms of NdFeB being used per motor. And when we're expecting to see battery electric vehicles increase, or the sales of battery electric vehicles increase from around 2.3 million units to around 17.3 million units by 2030, that's a huge amount of growth which is expected, around 19.4% per year growth in the use of rare earths within drivetrain applications over the next decade period. If we also look at the types of magnets which are also being required by this sector, those high-end magnets as well. This chart on the left here is taken from a JL Mag presentation, which shows on the y-axis the magnetic strength, and on the x-axis the coercivity. And for drivetrain applications, it's requiring those high-strength, high-coercivity magnet series. And the requirements as such need a high amount of NdPr content and also a high amount of Tb and Dy content to maintain that coercivity. If we're looking at other applications, or the other strong growth application for NdFeB magnets in wind turbines, we're expecting to see more modest growth, around 5.5% per year. And also the magnet types which are able to be used in here can have a lower corrosivity because the wind turbines typically have a lower operating temperature range. So there are greater opportunities for some substitution of NdPr by other rare earth elements, and there's a lesser requirement for Dy, particularly within these magnet elements. And this is really shown by this chart on the right here with the proportions of different rare earth elements which can be used within these applications. But the chart on the left here really shows how that demand growth by sector for NdFeB magnets is expected to propagate over the coming decade, and that demand growth is very significant. And when we look at the market balance for rare earths, we can see the strong impact that magnet growth is having on the supply-demand balance, particularly for those elements used in magnet alloys. So for Nd, Pr, Dy in particular. For neodymium and for NdPr compounds, we're seeing a short or tight market at the moment, a small supply deficit, which is having to be worked off over the coming years as further supply is brought online. But as we're seeing that continued strong growth from the automotive market and from wind turbines, we expect to see a supply deficit forming, particularly towards the 2030 period or late 2020s period. And we expect to see a pricing reaction during that time to incentivize the development of further production at expansions existing projects, and also the development of new rare earth projects globally. It's a similar story when we're looking at the heavy rare earth markets. So if we particularly look at Dy here, we see a tight and short, tight market or a supply deficit in the short term really being alleviated as some of that additional heavy rare earth production comes online, and also an increase in recycling. But by the late 2030s, that demand growth, particularly from the automotive market, is expected to see demand deficit, supply deficit forming. And again, we will see a pricing reaction and the incentivization of further expansions and new supply being brought online. I hope that you found this presentation informative. If you do have any questions, do feel free to get in contact.